time in your calendar to go over the stuff from Irina. I'm digging this Deepak Chopra meditation Monday too.
Yeah, I always love his stuff.
I haven't really listened to his stuff in a long time, but
We need to hire somebody that knows how to run Zoom calls. I'm tired of this.
he knows how to run what? Sorry.
Zoom calls.
Oh.
It takes me 7 minutes to get logged on because nothing works.
Oh. You're masquerading as Hoy today again?
Yeah, I'm Hoy. Links don't work.
Oh, that sucks.
All kinds of shit. Can't get people to come in here because they don't even know how to get in
It's not fun.
You know how to change my name.
I can change it. If you make me co-host, I can change your name.
What?
I said, if you make me co-host, I can change your name.
I don't even know how to do that.
Oh, Catherine would have to do it because Catherine is the host.
She's off doing other things. So.
Oh. Well, if she can make me co-host, I can help you out, but only she can do it.
Yeah, no.
Only the host can make me. Stupidly.
I don't know. Scanning all over, trying to figure out where to do the damn thing. Rename. There we go. I found a button.
Ah.
There we go. Anyway. How many Christmas?
2 weeks from today. So 14. Hey, I started that Deepak Chopra thing yesterday, and 21 days brings us right to New Year's.
Oh, New Year's Day.
New Year's Day.
There you go. That's cool.
So it has the, you talked about doing each day and then doing the like 1 day of reflection, like listen to all of them for 1 day. So if you started yesterday, all of them for 1 day would be on the first.
Yeah. And then you can spend the first just doing a 21-day abundance meditation overload.
Overload on like speed 2.5 so you can get through it in.
I think at 15 of them, they're 15 minutes a piece. What does that work out to over 20?
Yeah, it's like 5 hours.
Is it a long
Yeah.
one? Yeah.
Because 15 minutes, 4 would be an hour. So
yeah, that's
21.
true.
So that's like 5.5, little over 5 hours. If you do it on regular speed, you could speed him up a little bit.
Yeah, do them on 1.5.
Hurry up, 1.5.
Hurry up and meditate, right?
Hurry up, meditate faster.
Hurry up and calm down. Now you know what it feels like to be a man. Like, hurry up and calm down.
Hurry up and calm down.
That
ain't gonna work. Like, calm. What are all those slogany things? Calm down and carry on.
Calm down and carry on.
Hurry up and Palmdale.
Yeah. I don't know about that.
Hurry up,
Um,
wait.
There we go. So today's supposed to be industrial day or something. Catherine's got the screen shared. I don't know what's going on.
We can see the lineup, daily show lineup is what's being shared.
Yeah. So industrial day. I was hoping Adam would come to the show. He's got industrial
Oh, yeah.
stuff that they're wanting to do, and
He's not coming? What's that?
I don't know.
Oh,
Yeah. I don't get clued in on all the things
they don't tell you anything.
all the time.
Oh,
Invited this week.
Got it. So, yeah, we're trying to figure out what we're doing for events coming up, and talking about doing events with Landshark, talking about doing events with Wealthwise Women, and starting the Flipping Female program back up and stuff like that. So would industrial be a part of that, Catherine, or is it just residential houses?
For Wealthwise Women?
Yeah,
Yeah, it's all the things.
yeah, it's all of them. Yeah, it's residential, or yeah, it's residential, industrial, commercial, all the things.
All of them. Residential, commercial, land, industrial, because
Okay.
it's about diversifying their portfolio into different asset classes.
Mm-hmm. So, and you and Adam's done an industrial deal in the past. You want to speak to that?
So we did how Adam and I have done it is doing the I need to find the address. It was in Mesa, and it was an infill lot. So what an infill lot is, it's lots inside of cities where they don't really know what to do with it. We love these. And the whole purpose of how we do these is essentially it's those buildings that are little office in the front and then a mini warehouse in the back. And this one, I think it was like 8 condos that we built, and we sold each one off to different blue collar companies. And so our whole methodology behind it was because it's people who started these blue collar companies from home and have outgrown the space at home and they needed space. And rather than leasing, giving them a space they can actually own where they're building their own equity
nice.
inside their company. And so having that it fulfilled on my need to leave every person, property, and community better than we found them. And helping them, giving them a hand up, so to speak. And so it was very lucrative and profitable for our investors. I believe on that one investment, our investors made, I want to say it was like 35% ROI on that deal. And I have some pictures and videos. I need to go back and probably create a whole montage of that whole timeline of how that happened. But yeah, those are was very lucrative, was very gratifying in multiple ways, multiple layers. And so we are going to definitely be doing more of those coming here in 2026, which we're really in the middle of a conversation of starting a fund that literally just builds these out. And so gives our investors very lucrative returns. So we're very excited about that. Yeah. Hopefully that's clear of an explanation of what it is.
Oh, yeah, no, and getting engaged in doing something across the country, it makes it easier to find industrial land to do that type of stuff, because industrial land can be consumed pretty fast because it's only like maybe less than 5% of the buying population. But because it's only 5% of the buying population in real estate, it carries the most significant amount of value, you know?
Industrial does?
Yeah. So, cause industrial is again, like if you took a pie and made it and called it, and called it real estate, at your sharing screen, pull up your ChatGPT and we can ask you that question, but what segment of the market is industrial when compared to all the other segments? I don't know, for some reason, I can't see anything on the screen except my big head and the slow one.
You don't see me, Laura, do you see me sharing my screen?
Yeah,
So it's the
No.
view you're in.
I know, well.
or you've got if you, I don't, yeah, it's either the view you're in or the window, sharing windows hidden somewhere.
Hmm. Yeah,
I
I'm
see,
click,
I see your chat GPT, Catherine.
yeah. I don't know how to get out of this position I'm in. Actually,
Um, you could go to the top of your screen that should say view and you can change your view. I don't know
yeah, I have
if you,
two. I have Catherine and I have webinar and that's it. And I see then my big head, nothing else. You, gallery, speakers. You done. I just got it over to you. Okay, and that's all I see. I can't get that to come down here. Click on the three bars. Window. Getting down, that's for sure. Window, timeline, great content only. Perfect.
So you can share from your screen and do all the things.
If I was, yeah, but I'm having enough issues where I can't even see where this one is, so that's why I'd rather yeah, go ahead and unshare, I'll share mine. If I can figure it out, then great, if not, I'll see you back in here in a minute. Figured since you were already doing it, it'd be just super easy to do it from yours.
I'm happy to share and keep going.
Yeah. Yeah. Somebody was asking last night about Deal Hunter and all the things it can do. Deal Hunter, we need to know the segment of the market. When we look at real estate as a pie, we know that residential takes up a certain portion of that pie, commercial takes up a certain portion, raw land takes up a certain portion. Can you create a breakdown in a table for us to look at, like how it all breaks out? We know that there's like commercial one, commercial two, commercial three. So you would segment those within that bracket, within that piece of pie. We also know that there's industrial one, industrial two. We know that there's multifamily residential, single family residential. So kind of break down where we are in 2025, or historically, what segments do the most amount of transactions? And so as you roll through the segments of transactions and the trends across the country, single family homes are 35% of the market share, followed by 8% of that being multifamily, and then large multifamily with 5+ units is 6%. So overall, you have at least 40, what is that? 44% of the market is residential, right? So then when you go and look at commercial, you have 9, 12, 14% of that is for commercial. You can see that the transaction volume is moderate, low, recovering. When you drop down to industrial, you got light industrial, heavy industrial, and then flex. These are a total of 9% of the total market, which is lower than land, because you can see land is 8%, 4%, that's 12 and 14 down there. You got 14% land growth, or land is part of the market, and then industrial is less than that. And then even in the specialty where you got mobile home park, self-storage, senior assisted living, medical office, like it's giving those segments, because those can kind of go in industrial or commercial. I consider every one of those to be commercial, because they all carry a C1, 2, or 3 zoning. So at that point, you can take that 6% right there and go tack it back up on the commercial. Industrial has the lowest segment of all real estate market transactions. That, in comparison, we'll go look at it. Now compare on residential, commercial, industrial land, and then just take the specialty and other and put those into the commercial categories, so that we are working with these 4 specific segments. Based on the 4 specific segments, which ones have the highest volume of revenue, which ones have the highest amount of money spent on them, and what is that amount? And so Deal Hunter will go and analyze this. So I was talking with somebody about how a GPT, when it's built to analyze, it will just go out and analyze. And it'll get information and come back with it. Even though it's geared to do real estate, it can literally do just about anything. So, because it has the capacity to do it. So ranked number 1, and tied for 3rd would be industrial. It says a little bit there. It shows that the housing market is 55 trillion. And then you have commercial at 1.7, industrial doesn't even have a number, and land is down there between 8 to 10%. We have way more market indicators in residential. Residential's ran through a transaction broker somehow, whereas in industrial and commercial, not always. Like sometimes people will do backdoor deals. They just trade hands, go down to the they'll go down to the
Courthouse.
state courthouse to the recorder's office and get things recorded without ever going through a transaction broker. So that's why a lot of information is left off the books. But where there is industrial, one project could be $1 billion, so you can see down here that in 2023, commercial real estate was at 647 billion in 2023, with likely to rise in 24 and 25. So it's up in the trillions now, pretty for sure about that. But again, industrial carries that higher weight because of the fact that once it's entitled industrial, it carries the most value, because you can do the biggest type of development possible. Another reason why residential kind of scoops the lead right there, and you can see the 55 trillion, is because you can do multiple transactions on one property. I've done it myself. So I think that sometimes the numbers get inflated just based on that. It says here that over 4 million homes are sold annually with a price range of 4. So when you look at it from that standpoint, and what I think they're leaving out is out of those 4 million existing homes sold annually, I think what they're leaving out of that is how many of those homes are sold multiple times in 1 year. So I think that's a big consideration. So, but you're also not going to have as many industrial deals. So the point of this was that when you do all the industrial deals in Arizona, well, at some point you're going to hit saturation. And absorption rate is a big, like right now we can discover what the absorption rate is in the Phoenix Metro for industrial. Do we have surplus or do we have demand? And what Deal Hunter is going to do is kind of analyze the information that's been out there about surplus and demand. It's going to even go and compare notes down at the county. It's gonna get us some information from a variety of places. We're gonna find out here in just a minute. So it shows that in the total demand for space, Q3 of 2025, net absorption was very strong, with roughly 7.9 million square feet absorbed in Q3. In Q3 of 2025. That's nearly 3x the prior quarter. So like the amount of year-to-date absorption is 15 million square feet of industrial space. And so the CBRE data also indicated 6.4 million square feet have been absorbed in just Q3. So the numbers aren't too far off. This one shows 7.9. And that's with Colliers. Colliers Arnold is a large commercial brokerage. So their data can be skewed. And then you got CBRE, which is a branch of believe Colliers. I forget what CBRE stands for anymore. Yeah. Anyway, CBRE, this is their newsletter they put out daily. But the Phoenix Industrial in 2025 was a big conversation. So vacancy and supply signals, 9.8% per Colliers, down quarter over quarter, indicating less vacant space as demand soaks up inventory. So and it shows that inventory is really kind of dictating how much you're going to spend on stuff as well. And then new deliveries of industrial space slowed sharply, meaning that they're kind of dropping off on how fast they're getting the projects done, and that the construction pipelines are smaller than in recent years, which should relieve oversupply over time. So we've got quite a bit of supply on the ground right now. We can find out how much we've got on the ground, but it's slowing down at 9.8%, 13 to 13.4 in construction, in the slack of construction. So what they're able to determine is that the net absorption divided by the total inventory gives you a quarterly or annual basis, a percentage. And so right now the Phoenix industrial inventory is large. There's hundreds of millions of square foot, but with 7.9 million square feet absorbed in a quarter, the rate of take up is accelerating, meaning people are like, even though we have vacancy on the ground, we have a decline in vacancy because of the fact that the rate they're taking it over is going up. We're still building new space. So what this means in this market is that the demand is strong, supply is starting to ease, meaning like we have less supply coming on the market. So that'll balance out the price of things. So the overall balance shows that in early 24, early 25, vacancy rose due to heavy speculative construction. We had everybody building buildings. Now those buildings have been taken on by Q3 25. Vacancy trending is down, meaning that the demand or the absorption is rising, like people are sucking up these buildings. And we're slowing down how fast we're finishing the projects. Because before we were finishing a building a week, now we're finishing one every 2 or 3 months. So by doing that, what it's doing is imagine like as food, corn, like the amount of corn we're producing is going down while the amount of corn we have in surplus is getting eaten up. So then there's that balance of stuff. And what ends up happening is that the demand, hopefully what happens is that the demand doesn't go beyond the supply. We end up with a massive supply and no demand, because then what you have is this gap in here where prices crash. Because you got to get these people to fill those spaces now. So with doing this, what it's doing right now is this right here. It's going from high, low supply to high supply, and demand's dropping down because more and more people are filling that area. So the sponge is almost full. And that's why it says demand is currently strong. When those two level out, demand becomes stagnant. We better be done building buildings. If we're not, we're going to end up like Detroit. So, and the last thing Phoenix needs is to become like Detroit. It's too close to California. So these are the things that industrial investors look at and determine and decide, well, is this where I want to be? Because watch this. Based on this information, we'd like to see what the same results are for the market in Joliet, Illinois. We have intentions on building a data center there, and we're looking at land in that general market. So let's get an idea of what that looks like right now based on all the things you discovered about Phoenix. We want to look for this in Joliet. Ready, go. I gotta get something right. Dang it. Hit the go button. What was it, Catherine, that you were telling me you needed to find out if Deal Hunter does as well? There was something you wanted to know if it did or not. And I was telling you it was able to do it.
Analyzing businesses.
Got it, yeah. So I'll show you an example of that here in a minute. The industrial market for this area in Illinois for data center development is it got the absorption, vacancy, supply, and demand conditions for industrial real estate around the broader Chicago area. And Joliet is part of the Chicago area. We've got currently, and look at this, it's nowhere near the numbers that Arizona's got. We'll do a side-by-side on it so that you can see. I look at these numbers and understand them pretty well. Here's our side-by-side, historically higher but tighter. And then Joliet is a sub-market, it's a bit elevated. Absorption, strong net absorption growth quarterly, and then you've got positive absorption, but smaller in magnitude versus Metro Chicago totals. Then you got speculative supply, we've slowed that down, and then over in Joliet, there's significant new deliveries ongoing, but leasing is still active, meaning that there's not empty buildings sitting around with big, we lease 10 million square feet. Those signs are annoying. And then the demand trend, strong fundamentals and logistics demand in Phoenix. And then there seems to be stable demand in the Joliet area with industrial and emerging technology space in demand. So bringing a data center to the Joliet market is probably a decent idea. So a large proposed data center project has been discovered, 795 acres in South Joliet. Like that's huge. Let's see what else is there. Joliet benefits from strong transportation infrastructure. It's got the 2 highways. The crossroads of America is right there, I-80 and I-55. There's rail, there's logistics networks for the trucking industry. So strategic conclusions are, is there demand? Yes. Is there surplus? Moderate. And then what does this mean for you? Well, in developing a data center, it could align well with regional momentum, focus on tailored modern infrastructure rather than just general industrial product. this is able to capture demand and may lease more efficiently, meaning like, because it's a data center, we might get able to get it filled up quick. So, again, looking at the quick summary table, there's 480,000 square foot of recent net absorption, whereas over in Phoenix, it was like millions. The absorption rate in Phoenix was you write down the net absorption out here. Yeah, it was 2.5 million in Q3. So, or I'm sorry, that was not deliveries. Where was the 7.9 million in quarter three, 6.4 to 7.9. So between you know the Phoenix market and Joliet, there's a difference because Joliet is kind of like saying Goodyear, Arizona, not Phoenix, Arizona. So Phoenix is encapsulating all the things that are around it. If we did this for Chicago, it would definitely change the numbers again. So, but the new deliveries is up there with the amount we're seeing in Phoenix, because 3.2 million in deliveries in just Joliet alone shows that up here, the industrial is hitting right there, it says 2.5. So there's, you know, comparatively, Joliet is only maybe, let's see, we'll do this. Compare the Joliet market and the Phoenix market side by side. And this is one of the benefits of GPT. It's not necessarily that it's associated with Deal Hunter. GPT will put things together like this so that you don't have to go scrolling back and forth. Sometimes I forget that. So based on the information we got from both, you can see the contrast between the two areas, and what the importance of that is. So when you got green check marks, you can see that there's ways of comparing. Is this a better area? Is this a better area? This is why Deal Hunter is going to be very important for Wealthwise Women, is because you're teaching women how to analyze deals. You don't have to be an industrial developer mindset in order to just sit here and have a conversation and ask questions about it, right? So to analyze businesses, for example, this is all great information. Now what I'd like to do is analyze businesses. We've got a data center and we'd like to do some research on it. The name of the data center is called Coastal Crypto. And we want to know their full-scale crypto mining, but what could we do to create a passive stream of income for Wealthwise Women behind a crypto mining company? How could a group of women either start their own or begin to invest in one that they can build ground up? And so what would you want to investigate, or how would you want to look at a business? Would you want to, because when we were looking at buying that landscape company, we used Deal Hunter to run that entire project through Deal Hunter and discovered a lot of things there. It actually showed us where, you know, the guy was taking a significant amount of owner contribution when he sent us his financing and bookkeeping, remember? Hello?
Yeah, I do remember that. And I'm trying to remember that I was in a conversation yesterday with somebody about a business that we need to analyze, and I can't remember which business it was. Oh no, was it crypto? I don't remember. I don't know.
So basically what it shows here is how to get started in the crypto mining space. And our relationship with Mark and John would help establish this, because they would love to have people set up their own mining corporation and begin mining. So, John and Mark have done this for themselves for the last 5 years and have become very successful. Up a couple of groups of women to do this in specific areas would be a pretty substantial way to add, commerce to bank accounts, in my opinion. So it shows here that the example of passive income pathways for your group is to start a crypto mining hosting company, for revenue share. The effort is very low, the income is monthly, and the scalability is high. Equity in an already owned data center, the effort is medium, the dividends and equity growth are there on the income type, and then the scalability is very high. Creating a mining pool participation, again, effort is low, proportional to rewards, meaning like whatever you're making is what you're going to get income wise, and then the scalability is moderate. Cloud mining contracts, the effort is just absolutely like you're making money while you sleep. It's contract based on payouts, and then the scalability is not there. You're just, the only way you scale it is by going and get more clients. And so, and then DeFi staking and lending. This is kind of another way of making money. Basically what it is they need to cash flow something, so they'll leverage their crypto, get cash flow, pay the electric company, use up the electric, make money from the electric, pay back their loan, get back their crypto. And so when they do that, that's this DeFi staking and lending, where they're getting back interest. In some of these cases, it's up to 50-60% annually. So, and the scalability of that is medium. So that's just on a crypto thing. To kind of break into where we were at with doing this, I'm gonna double check here and search for AZ Grass Pros, I think was the name of it. Yep, here we go. And so what we did with this was we analyzed this business. And we came up with all the documents we needed to buy it. And some of the things we did was like we had it review the website. Then we told it to kind of give us a ballpark value. This is where it was real important for us to understand like how much we were going to pay for the property, pay for the business. He had an assumed revenue of between 5,000 to 500,000 to 1.5 million. And if we assumed his expenses before interest, taxes, depreciation, and amortization, then what we came up with was that price and the multiple of that, showing that on the low end we should be paying about 120,000 up to 1.25 million if he had strong growth and high growth and strong margins. So based on this, we found that his price, he wanted 150,000, I believe. So he was a little bit high on the low end. And so we tried to work with the guy and get him to give us, the opportunity to take 75,000 now, 75,000 later when everything worked out. But it just didn't work out for that guy. He claimed he had an annual revenue of $1 million. And so we were super excited when we heard that, because it gave us then, a multiple of 3x. That gives us a value of about 500 to 550,000. And with that $500,000 value, we were buying it at 125. We were super excited by that. So what we did was we created an LOI and told them that, yeah, we'll pay the 150. I actually removed the purchase price here. I had them change it down here. You'll see when I wrote that, I was like, no, take that out. We don't want to tell them what we think it's worth. Are you crazy? And so I had them fix it. It was 125, not 150. We fixed it for 125, wrote the LOI, wrote an NDA, signed everything, sent it to him, and said, now send us the financials. So once we got through this part of it, we were able to get the financials. I'll pull that up real quick. I think this is where it's at. Let's see, zoom up to the top. So he wanted to know a list of the properties that, or I was making a list of properties that we needed to do one pagers for. I don't think this is it. This is all the different properties we have. Go back. Projects, different things. We've analyzed businesses using Deal Hunter on all levels. There we go. See actual purchase contracts. So yeah, I think the financials are in here. So yeah, here we go. So we took some pictures from his website and then put it all in here and then said, you know, give us we added the profit and loss statements. I said, so now we're looking to purchase this property. I want to package an investor pitch for this and then, you know, review them and all that and come up with bankable documents that we need to put in front of investors. So we loaded everything, put it all in there. And here's what it kind of came up with. It showed us the key highlights to the tax returns, things that we needed to be, you know, concerned with, because like there was things were just inconsistent. So, you know, it says the revenue that was validated, but then there was a net income of only like 10% of the revenue. So it was like, wait a minute, what the hell? Like, how are you at 90% operating expenses? So that was confusing. So we kind of tried to go through it again. It showed us the discrepancies that there was, the P&L showed a $13,500, more on the tax return. Gross profit matches the revenue discrepancy. So there was no cost of goods and services variance. So that was an issue between the one versus the other. So operating expenses and the P&Ls were compared in order to find these discrepancies. So in here, it showed us that 2040 had almost like perfect alignment, very little issue of like 4,300 here and 1,000 here on the discrepancies. So super excited about that. Things were really going good until we were like, hey, we still need to run this thing the right way. And it appeared that he had pulled out a lot of money as the owner that we can't, you know, account for. And so I told him, I was like, you know, we're going to look at this again from a better bird's eye view to understand. But at the end of the day, there was the net income was still only like 1% or 2%, 10% or 12% of the gross income. So you just couldn't understand why he was spending $500,000 to $550,000, you know, $550,000 to $600,000 a year to operate. It just was blowing my mind. So, because again, if I can cut costs and still make the same gross, then that means we'll have more revenue. But then we discovered things like he didn't have a solid employee, all subcontract. So that's why his price was so high, or his expenses were so high, because he's literally, you know, just taking the price of a contractor and adding 40% to it and selling the contract. So if we had employees, we could actually lower our expenses by 30%, taking care of employees instead of paying contract. So we created a pitch deck for investors. We got investors excited about it. We were able to put it in front of some people and they were excited about it. Said, yep, we're all in. We got ready to go and make the guy an offer. Let's see if I can get past the pitch deck here. We went in and made the guy an offer and basically explained to him that we'd still need him to be on board with us for 6 months. So I basically said, we'll pay $75,000 cash up front $50,000 within 90 days of that. And like 90 days, it's all I needed. And he refused to do it. So we had a purchase and sale agreement that we sent over. He said it was non-negotiable. And we said, okay, and we walked away. We did this because of the fact that our concern is that anytime we buy property or businesses, that we're not buying someone else's headaches and problems. And what we discovered with this guy was that he didn't have a pipeline of work anymore. He gave up on it, personal issues. He suffered from the diagnosis and something else, but I don't know if it's drugs or what, but he just could not bring himself to accept 75,000 now and 50,000 in 90 days. And what the result was, he literally just gave up the entire business. Nobody ever bought it. And this went away. So, as bad as that is to say, I'm glad it wasn't us. So, because it obviously wasn't strong enough to stand on its own. So we were buying it at a discount, understood that, but at the same time, we needed to make sure everything transferred through. So that's how we handle our businesses. And that's something to take into consideration when starting the Wealthwise Women, when you guys start the 7 Streams of Income Mastermind, is that you have to farm deals on a daily basis. You can't just wait and sit back and see what kind of deals show up. Here's an example. We did not get either one of these deals. So can you go out and review the website called Biz Buy Sell and any other business sale websites and bring back information for us to review and analyze? We do this because, for example, and this is why it's important in industrial, Adam, Catherine's partner, will tell you that like blue collar companies are on the market right now. There's a lot of blue collar companies on the market. Those blue collar companies need those flex spaces in the industrial space where there's an office in the front and a shop in the back. And so by using Biz Buy Sell, we can actually use this to farm people that are needing those types of spaces. Like right here in Florida, there's 5,700 businesses for sale in Florida with a median asking price of $350,000. So the websites that are out there, Biz Buy Sell, BizQuest, LoopNet, businessforsale.com, using business brokers. We have a really good relationship with a business broker out here in Arizona. They buy across the country. Dr. Fernando and Dr. Fernando and his wife are business brokers. They do an amazing job over at First Choice. So we get into any kind of business deals, we use them to help us analyze it, but we use Deal Hunter to get us into like that discussion. Like if we can't get it to pass Deal Hunter, I'm not going to go waste Dr. Fernando's time. He's getting 10% off every deal, So if I bring him a deal worth $1 million, he's going to get $100K, So I don't want to waste his time. I don't want to spend the energy doing that if it's not going to work out. Bring me a list of the top 10 blue collar businesses for sale right now in Arizona. I'd like to also see Arizona and Florida. Those are the 2 areas I want to see if we got the top 10 businesses for sale on these different websites. And so by giving it a specific amount of businesses we want to review, it should pull that data and bring back to us a good list of stuff that we can use to go through it. So looks like the number 1 top 10 business, they're giving me 10 businesses under landscaping. And that's Arizona. So it's like the top 3 landscaping outdoor, and pool cleaning company. Then you have handyman services, dryer vent, superheroes franchise. We know about that a little bit. 100,000 on semi-absentee transport company. So transport logistics business with upside. Home and residential flooring business. automotive locksmith business, construction demolition contractor. That one sounds pretty good. Says it has substantial revenue. But one of the things you're not gonna find is when you go and look at a business, they're not gonna put. They're typically not gonna put the name of the company there for you to review because, you know, they wanna make sure they get paid too. So let me grab this picture real quick and swing it over here. This is on Biz Buy Sell. And so you can see here, there's just it's just a laundry list of companies. From mobility scooters to automotive franchise. You've got licensed insurance, like you can pick any one of these, and maybe we do a deeper dive tomorrow on businesses, but we can go in and find these companies, pull them in the deal hunter and run them to see if they make sense. So that, you know, when you're doing this with Well-Wise Women, buying companies becomes a way you guys are able to create, you know, passive income, you know, so. Right here is the demolition company, it looks like, so high growth construction company, revenue is 425,000 a year. Or I'm sorry, 2.4 million a year. Their cash flow is 425, they're looking to get 1.5 million, it's a rare opportunity, it says. And like, I need to look at this, because this is my forte. So we do this type of work on a regular. So I'm gonna dig into this after the show. It's 3 minutes left, so I'm gonna let everybody jump off and go and enjoy the rest of your day and get a lot of work done and be productive. I appreciate everyone coming in today, and I'm gonna go off and run this deal. So God bless, and we'll see everyone tomorrow.
Thank you.
Bye-bye.